point. And everybody is worried about interest rates right now. That is a consensus thing, and it's priced fairly, right? You get paid nothing to own short duration. Like, you take all this crappy credit spread risk and you get 30 bips a year maybe if you're lucky. So I don't see the point personally. I'm like, why bother? I'd rather have IVOL cash and other stuff. So I think short duration has been really popular because a lot of investors just don't have a good place to put cash, and because it's a 40 Act fund, right? It's literally intraday liquidity, and a lot of our institutional investors will trade it at the NAV. This is cool, and I know you guys are ETF guys. It's so interesting, the NAV based technology. So I here's my analogy. I think of trading in the secondary market, that's the shares outstanding, as like dirty clothes in the laundry, right? They're just going around in the bin. They're just trading hands. The primary market is you can also use for ETFs, just like a mutual fund where you trade at the NAV. ETFs have that as well. So you can always use the primary market to do, it's called a NAV-based create. Look, it's my business card right here. I don't know if you can see it. My business card. And on the back of it, it has the 3 magic words, which is called a NAV. I can't get the screen right. NAV-based trade. NAV-based create is like the new magic words that I learned, because some of our institutional investors, when the fund was super small, they'd put like $10 million market order and the thing would go, wah! And there was no reason that it was going up so much. So a NAV-based create is the 3 magic words if you're buying. NAV-based redeem is if you're selling, but you can always trade ETFs at the NAV, and that's like putting those into the machine or taking them out. So that's
talk more about that. Talk about the specific process, because we agree, we go through this all the time. We run some ETFs and we see those hairy bars and we just start,
I know, so frustrating.
It's
Well,
like
the
control the
market is
relationship,
so
you're good.
easy.
It's when you don't control the relationship and they're buying at the wrong time, at a time where markets are close, whatever, right? So if you do own it, that mechanism is key.
Yeah. So Nancy, walk through that. Maybe just hypothetically, not for any fund that any of us manage, the NAV-based create process, because I think that's tremendous value add.
So let me share screen. So all ETFs have a creation size. So let's just look for first. We'll look at Spider just because it's a big ETF. You can go to the it's probably on the website or whatever, but you can call your ETF desk and say, what's the creation size? Most ETFs trade in 50,000 shares. That's a kind of typical creation size in the US. What is it in Canada?
It's about the same.
About the same. So let's see. And some ETF issuers charge a creation fee, like Spider charges $3,000. IVOL, I made it small on purpose. I did the smallest we could at the time, which was 25,000 shares, because I want it to be efficient. I want it to be like a good thing for clients. And then we waived the creation fee, so it's 0. So this is it's 25,000 shares times the NAV of the fund is 1 creation unit. And so let's see, let's put in you guys HRAACN, right? So yours has 25,000 too. And yes, also great for investors, no creation fee. I was hoping that was the case. So both your ETF and my ETF are very efficient. And here I'll show you on our, let me go to our presentation deck. This is not specific to IVOL, but if you go to the back of our presentation deck, it is page, which one? This one, page 17. It has a little slide here, not specific to our fund. All ETFs work this way, describing primary market versus secondary market. Secondary market is the shares outstanding. It is the clothes in the laundry machine. They just trade hands. Primary market is adding laundry or taking it out of the bin, and you can use that with the APs. Our fund, we have 17 different APs, and you can even do it with your custodian. You just call up and say, I'd like a NAV-based create, or you can ask for a block trade, and then you can compare to see which is better for your investors to use. But I think it's awesome that you guys have no fee, because it just makes it more efficient. And I think it's also good when you have dislocations in the market. Like for instance, March was a mess in the US Treasury market. The Treasury market got completely whack, and that's my technical term for it. It broke. So liquidity can go away in any market at any point. And if, say, you owned any Treasury ETF, IVOL, anything, and you wanted to sell and the fund was trading at a discount to NAV, you can also sell using a NAV-based redeem. So it's just a good thing for ETF investors to know. As fiduciaries, they can always decide which is the better way to execute primary or secondary. And it sometimes depends whether you're buying or selling, which is better.